Hello everyone, you're very welcome back to the channel. Today we're answering the question, what is the best savings account for Irish savers? Whether you're looking for a short to medium term home for your lump sum savings or instant access to your emergency savings, selecting the best savings account for your specific needs should be a top priority. When comparing savings accounts, there are a couple of factors to consider, namely accessibility, i.e. the ease at which you can withdraw your savings from the account, interest rate, i.e. the rate of return that the savings account offers, fees, i.e. the cost of the savings account, investment amount, i.e. the minimum and maximum amount that you can deposit into the savings account, deposit protection, i.e. whether your deposits are guaranteed in the event of the bank's failure, and taxation, i.e. whether or not your Irish tax obligations are handled on your behalf by the institution that is offering the savings account. Because yes, you do have to pay deposit interest retention tax, or DIRT, at a rate of 33% on the deposit interest that your savings earn. Each of the savings accounts covered in this video will be compared on the basis of those headings. Let me preface this discussion with a reminder that the rate of inflation in Ireland in 2022 was 8.1%. The expectation for Irish inflation in 2023 is 4.4%, with an anticipated return to normality in 2024. None of the savings accounts mentioned in this video are going to provide you with a return that exceeds inflation expectations for 2023 and perhaps even 2024, depending on the account. In other words, a savings account won't protect the value of your cash from the effects of inflation. However, the purpose of these accounts is not to earn a return that keeps up with or outpaces the rate of inflation. That's what investing is for. Instead, the purpose of these accounts is to earn an acceptable rate of return on our uninvestable cash, i.e. cash that we can't or don't want to invest. With that being said, the first account I want to cover is a brokerage account with Trade Republic. Trade Republic is a German investment firm based in Berlin. Their main offering is an investing app where users can invest in the global stock market at the click of a button. Trade Republic has over 1 million users spanning 17 different countries within the Eurozone, one of which is Ireland. Unlike all of the other accounts that we cover in this video, a brokerage account with Trade Republic is not the same as your typical savings account. That's because Trade Republic isn't a bank. However, that doesn't mean that you can't leave your cash on deposit with Trade Republic, because you can. You see, Trade Republic partners with banks such as Solaris, Citibank, JP Morgan, and Deutsche Bank so that customer deposits may be held during the intervening period between the time that deposits are made and the time that deposits are invested into the stock market. In your case, you won't be investing your deposits, so they'll continue to be held with Trade Republic's partner banks until such a time that you wish to withdraw. So why would you choose Trade Republic over a standard savings account? Your savings are fully accessible at any time with Trade Republic. Standard bank transfers between your main bank account and your Trade Republic account typically take between 1 and 3 days. So you can expect deposits and withdrawals to be processed within 72 hours. Trade Republic offers users 2% annual interest on their uninvested cash. So by simply transferring your savings to Trade Republic and keeping them there, you'll earn 2% interest. The interest is paid into your Trade Republic account on a monthly basis. This means that should you decide to keep your interest within the account, you can earn more interest on interest that you've been paid, i.e. compound interest. There is no catch here. Trade Republic is offering 2% interest to customers because the European Central Bank's rate hikes have made this possible. They're simply passing the benefits of higher rates on to depositors, something that the traditional Irish banks have been slow to act on. There is no minimum amount that you can transfer from your bank account to your Trade Republic account, and likewise, there is no maximum limit. However, 2% interest will only apply to cash balances up to €50,000. In other words, if you're planning on using Trade Republic as a savings account, there's no point in holding any more than €50,000 in your account. That's because any excess cash over €50,000 won't be eligible to earn 2% interest. The question on everyone's mind, especially in light of the recent collapse of Silicon Valley Bank, is how safe is my money with Trade Republic? Not only is your money perfectly safe, but it's also 100% protected in the highly unlikely event that Trade Republic's partner banks become insolvent. That's because Trade Republic's partner banks are subject to the deposit guarantee scheme as per EU legislation. Under this scheme, bank deposits are protected up to the value of €100,000 per depositor per financial institution. Because you're only going to be depositing a maximum of €50,000 in your Trade Republic account, your savings are guaranteed to be protected. Deposits held on Trade Republic are as safe as deposits held with the likes of AIB or Bank of Ireland. The interest that you receive from Trade Republic is gross interest, i.e. interest before tax. What this means is that you'll need to declare the interest that you receive from Trade Republic on your tax return and pay revenue the tax owed. Please do not let this deter you from getting the best bang for your buck. It's very easy to declare the interest that you've received on your My Account profile and to pay the necessary tax. What about fees? Does it cost money to open a Trade Republic account? Setting up a Trade Republic account is 100% free, and there are no fees charged for making deposits and withdrawals to and from your account. There is a 0.7% fee if you deposit money via debit card, credit card, Apple Pay, or Google Pay. So just stick to bank transfers and you'll avoid this fee. This might be obvious, but I think it's worthwhile noting that you can't spend the money that's in your Trade Republic account. If you want to access this cash for spending purposes, you need to withdraw the money and place it back into your bank account. If after watching this video you want to open a Trade Republic account, you can do so using the first link in the description of this video. Using this link as opposed to downloading in the App Store supports me as a creator and lets me know that you found this video to be useful. Moving on to our second account, we have the Bunq Easy Savings account. Unlike Trade Republic, Bunq is a bank and they offer what you might call a traditional savings account. Bunq is a Dutch neobank that was founded in 2012. The bank launched operations in Ireland in 2022. Bunq offers 4 different banking plans for individuals. Easy Green for €17.99 per month, Easy Money for €8.99 per month, Easy Bank for €2.99 per month, and Easy Savings for free. For the sake of comparability, we're only going to be looking at the Easy Savings plan. Under the Easy Savings plan, you'll receive 1.56% interest on your money as of the 21st of March 2023. The reason why I'm specifying the date is because Bunq's interest rate seems to be changing quite frequently. This is very likely in response to the ECB's continuous rate hikes, thus allowing Bunq to offer its customers a higher deposit rate. So keep an eye on the interest rate offered by Bunq to see what direction it moves in going forward. In fact, that goes for all of the accounts covered in this video. Bunq pays out interest on a monthly basis. As for accessibility, with the Easy Savings plan, you can deposit money as frequently as you like, but when it comes to withdrawals, while you can withdraw any amount, you can only do so twice per month. Unlike Trade Republic, which caps out at €50,000, Bunq offers 1.56% interest on deposits up to the value of €100,000, which perfectly coincides with the deposit guarantee scheme. Deposits with Bunq are protected up to the value of €100,000 in the event of insolvency. Bunq, like Trade Republic, pays gross interest, so you'll need to declare the interest that you receive on your tax return. As for fees, there are no costs associated with the Bunq Easy Savings plan. There is a 0.5% fee for depositing via EEA debit cards and credit cards, and a 2.5% fee for depositing via non-EEA debit cards and credit cards, though the first €500 worth of deposits each month via these methods is free. Once again, just stick to bank transfers and you'll avoid this fee. Lastly, we have Raisin Bank. Raisin Bank acts as an intermediary between savers and partnered banks. Irish savers can use Raisin Bank to make deposits with up to 9 European banks with whom Raisin are partnered. These are United, Blue Or Bank, Banca Privata Leasing, Banco Português de Gasto, Privat Banca, J&T Banca, BFF Banking Group, Alior Bank, and Eurum Bank. Each of these banks offer different savings accounts with different terms and conditions. For example, the savings account with the highest interest rate on Raisin is currently offered by United at 3.5%. However, the terms and conditions attached to these accounts lack the flexibility that is offered by Trade Republic and, to a lesser extent, Bunq. The United savings account that offers 3.5% interest comes with a 5-year maturity period. As is made very clear in the product information sheet, this means that your deposit isn't available to be withdrawn during the 5-year period, so you're committing to your cash being locked up for 5 years. In addition, the minimum investment amount for this particular account is €2,000, with the maximum investment amount being €100,000. Some savings accounts offered on Raisin might have have minimum investment amounts as high as 10 grand, making them inaccessible for many savers. Likewise, Bunq offers a 3.49% savings account with a minimum investment amount of just €1. So there's definitely options available for small sum savers. All of the accounts that are available on Raisin are protected under the deposit guarantee scheme. So your deposits will be protected up to the value of 100 grand for each bank that you choose to deposit with via Raisin. As was the case with Trade Republic and Bunq, any interest that you receive from Raisin's partner banks will need to be declared on your tax return, as the interest is paid on a gross basis. Raisin charges no fees for its services. It's critically important that you carefully read the terms and conditions associated with a given savings account on Raisin before depositing. Otherwise, you risk having your cash locked up for a longer than anticipated period of time. So with all of that being said, what is the best savings account for Irish savers? The vast majority of Irish savers are going to have cash balances below 100 grand. Most savers will want to have on-demand access to that cash, i.e. prospective homeowners saving for a deposit and individuals with emergency savings. For that reason, at the current rates and offerings, it makes sense to keep the first 50 grand worth of savings with Trade Republic. If you have more than 50 grand at your disposal, you could then open a Bunq Easy Savings account and deposit the excess savings there. Some of you might be asking, what about Raisin? Raisin is definitely an option for those who know with certainty that they won't need to access their money before the end of the maturity period. If that's the case, then you can find accounts that offer higher interest rates than both Trade Republic and Bunq. However, there comes a point where you have to ask yourself, is it really worthwhile locking up my cash for say 4 or 5 years when I could invest it instead? Yes, you're not getting the capital guarantee, but by investing in the likes of low-cost index funds, you can participate in the returns of the equity markets, which historically have been in the region of 8% annually. There are some 1 to 2 year savings accounts available on Raisin that offer interest rates in excess of 3%, and it's definitely worthwhile checking these out as well. If you have a question on any of the accounts offered by Trade Republic, Bunq or Raisin, leave it as a comment down below and I'll answer it. Which savings account do you think is best for Irish savers? If you enjoyed this video, you can show your support by leaving a like, subscribing to the channel and sharing with family and friends. Once again, if you're planning on trying out Trade Republic, you can do so using the first link in the video description. Before you go, you might be interested in this next video, which answers the question, should you buy a house in Ireland now or wait until 2024? Thanks very much for watching and I'll see you soon.